Okay, hi there traders and welcome to Trade the Structure and the Morning Jumpstart, the US recap. So we're coming into the Asian market session, time to look over what's happened overnight. And we'll start off with the ASX 200 just before we get going. Though just remember there's US payrolls out tonight. So I wouldn't be surprised if we have a bit of a rough session today coming into the weekend because I wouldn't expect you'd want to go long too hard coming to some payrolls, which could be inflationary, and we're seeing markets are reacting to inflationary data. The Bank of England just raised interest rates. The ECB in Europe are talking up rate rises this year, and on top of that, we've got US talking up 4 rate rises. So to me, that's just going to cap the action, and you're seeing the markets react to it on the downside. So just be wary if you're looking to dive into longs. It could bounce up, may not be right, but I expect it to at least, people would be selling into some rallies, some minor rallies. So I wouldn't expect too much on the upside, but it does open up for the downside move because people are getting a bit nervous at the moment, and it is getting weighed on the market. So we'll start off with the ASX, like I was saying. We'll get through the others in just a minute. Amazon, now they reported just after the bell, and you saw this big pop, which you'll see on mainly the tech and the S&P and the Dow. You saw a big pop just after the close, which I think is a bit overcooked. If you're looking at it, and if you didn't hold over that report to get that boost, it's very hard for them to start. I would expect to beat estimates next time, unless they say, "Oh, we're not going to earnings per share is going to be very, very low." Try to undershoot it so they do look good when they do release. But massive beat there by Amazon, which lifted the market. So we'll start off ASX. Excuse me again. ASX, that was the open yesterday. Really choppy. It did keep flushing in, but it bounced. It was getting supported into that 70.44 zone. Bounced off there, come back in, supported again into the close, the day session close. Once Europe opened, it was all one way action straight down again. So you can see lower highs in here, pushed into that zone, tried to bounce again, and then just flushed straight into it, retested it, and bang, straight down again. So the pressure's definitely on. We're seeing some key levels. That one's retested, so that's a key level to watch. This is your lower high, 70.26, just to keep an eye on. It's a good lower high, whereas this one's more of just a bit of a bounce and then a flush straight into the close. Wouldn't be surprised if we push into that 69.80 on the open. It's only really 16 points or so away. Test that, take out some stops. Now, if the market wants to bounce, it's going to take out some stops. I would expect it, then look for a higher low. Okay, but for now, I would expect just what I was saying before. I wouldn't expect too much strength coming into a Friday. Let's get on to what happened in the US, the Dow. So this bounce that's 8 o'clock. So that's after the close. That was the red candle. That final red candle was into the close, bang, straight up after the close. So that's due to one stock, Amazon, and a bit of a short squeeze, I would say. But this is the zone I'm interested in to see what happens around 35, 330, 320. I want to see what happens, see if it can retrace off that, hold a lower high and pressure down into 34, 810. I would expect more of a squeeze of these sellers coming into the employment data release it's at 12:30 Sydney time tonight. So I would expect a bit of a squeeze on that, and if they come out really strong, expect the market to roll because that just increases the concerns over inflation and rate rises. That's what I would expect anyway. But if it comes out a lot weaker, it could be a few. They may not have your 4 rate rises. Maybe looking at 3. They're not going to tighten as fast as we expect, and that's more bullish for the market. Look at the US tech. So that big bounce. So that was a flush. That's 7:30. So it was a bounce right at 8 o'clock. Bang, up we go. Due to one stock, like I said, Amazon. Not because everyone's all of a sudden things have turned. It's just because of one stock, and that's just a bit of a squeeze. So that's all your shorts, just probably getting squeezed out. Not so much a new positioning, a change of trend or anything like that. It's more of just after the market, after the bell, any futures positions, anything like that, which are all the CFDs which they go off, is a bit of a squeeze. Squeeze them out and see how we go. So there, the key level holding that down is still 14,886. I would expect that to hold, especially into the numbers. If there's going to be a bigger squeeze, there could be in a thin market. See if they can drive that higher. But you'll be looking at this. It's coming off some key levels through here. It's got a key level through that 15,338, and then this is some minor level which it's touched on the way down, and then it's headed south. But the anchor to that downtrend is still 14,886. Okay, so we'll have to see if that holds. If it does push up flush, I'll be looking for the lower high off it, or I wouldn't mind seeing some back and fill, and I'll be looking for a higher low somewhere mid-range I wouldn't be looking just to trade off that. I think it's too extended just because of the Amazon move. We'll see how that goes. US S&P, so yeah, just been dragged around by the tech, pretty much the fangs. You can see that uptrend, failure off the top, double top, RTF we call it, and you got your nice little shoulder rolling over and powered lower. Bounced again because of their fangs or Amazon, bit of love just after the market closed, but I was still that level there at 45, 44. This zone through here, I'll probably just type it in so you've got reference to it. 4544. That level in there, I think, is going to be key today. I would expect this is more of a flush, start to get heavy again, roll it, so there's an opportunity on the downside, but working off a lower high. But I do think that trend up is struggling. Okay, if you go to the daily, longer term, that level there, you can see it's reacted perfectly off that 45.90, say, or 4600. Okay, it's touched in there, reacted off, come through, tested it again, bang, nosedive, straight back up, test it, failure off there. So what we'll just be looking for is to see where there's going to be a bit of follow through. Yeah, just looking at that, there's a little minor level in here, which it did react off. And a bit of a short squeeze, that's all I think it is at the moment. We'll have to wait and see till the US data comes out. In Europe, a bit of a beating too in Europe. Well, not a bit of a beating, but there was a beating in Europe, headed south on the DAX. FTSE wasn't so bad, which we'll show you in a second, but the DAX was a bit rough. Coming to that support zone of 15,338, has bounced, but you can see this sort of uptrend. You see it's even a very broad channel, if you look at it that way. Very broad channel through here. On the way up, it's failed, okay? Whether we have a deep correction, lower high, and we pressure down, and we're starting to target down to that 1500 area, 15,000 area, yet to be seen, but we'll see. These are the three key levers I'm looking at today. I want to see if that 15,608 holds. I think that's pretty much your anchor to this downtrend. So there is room for, you know, this kind of a move. It comes up, suckers in some buys, and then turns around and squeeze them out, okay? Because it's still not breaking the anchor to the downtrend. So keep an eye on that tonight. Wouldn't expect, like I said, there's a bit of a bounce. You probably get some love on the open just because of Amazon, but I wouldn't expect too many heavy hands before the US employment data. Heavy hands for buying anyway. That's your FTSE. Look at that reaction up. Big short squeeze. So to me, I get suspect of these big squeezes because especially when the market looks like it's rolling over, what it does, pops up, squeezes them out. Everyone's going, okay, that was buy the dip again. But what they do is setting up for when the index is open and they come in and sell it. Okay, so they try to prop it up a bit aftermarket on the futures market just to create that, to ease the fears or anything like that, I guess. Ease the fears a bit so when the index is open, they can sell into the indexes. So you get the algos just sort of keeping it, propping it, driving it. A bit of a flush squeeze on those shorts because we know there's shorts built up there. Squeeze on them, see if they can roll over. And the same goes for, you know, the DAX, the US tech, all that sort of stuff after hours because we're talking about the big funds can only work during those the day session hours. And massive stocks, they don't want to be selling if it's too low. You know, they'd rather pop it up, sell into some bit of strength on the open. Aussie, over to the currency. So the US dollar dropped. It has been for the last few sessions now. I'm a bit suspect about that because I think that coming to the US employment data, don't be surprised if they have been selling the US dollar just to squeeze out some buyers. And if the US data comes out quite nice, bang, up we go again on the US dollar, which is going to cap these gains on some of these currencies, especially the euro. The euro is the one that's been quite strong. We'll go to that in just a moment. So the Aussie, we failed at that 71.57, tried to get up to here at 71.76, popped up there, flushed that level, straight back down again, some lower highs. So if that's your RTF or double top, I'll be looking for a shoulder here, looking for that shoulder and a roll, okay? Whether we can get something like this, bit of heaviness, and then the market roll over and we push it into 70.91, or even lower than that, that could break. But there's definitely that uptrend there, longer term. Look at this, whoops. Look at that move there. I'd say that's kind of broken. It just depends. FX market's doesn't respect that kind of a support too much. It could easily break that hold here and ramp straight back up. But technically, got a double top. That's going to bring in, especially after this kind of, you know, pop up, grind down again, retest it, fail. I tend to always be looking for a shoulder. Okay, but wait for the market to come to you, not chase it. Euro. Look at that powerful move up. That was just a big spike, and that was on the back of I think the ECB said potential rate rises, so a bit of love out of the US dollar and into the euro because that interest rate differential or the yield for the US dollar is coming in. But that's not happening, but that's the theory. Okay, so what currency moves, major currency flows or fund flows, money flows from yield to yield, high yielding US dollar, you'd be buying the US dollar, and on the flip side of that, you're selling the euro. But since the euro they're talking about rate rises now, that the differential is expected to come in a bit, or maybe maintain that. So as the US rate rises flow through, then euro maybe as well. So the differential between the two yields is not much. Okay, well, it stays the same. So anyone that was sort of looking at that widening is probably just been squeezed out of the market. Okay, any shorts potentially through here. So this is what we're looking at yesterday. It played out nicely. A bit tougher to trade coming to the ECB release, but still, it popped up into this resistance zone. Bang. More on that, not so much that was US dollar weakness, but just buying into the euro. Pound. We were looking at this yesterday, a bit of a reaction off that level. It did play out, but it didn't go too far. And that's more due to no one really wanting to get too far on the short side when they're looking at anticipation is they're going to raise rates. Okay, and they did. BOE raise rates. So from now, I'll be looking for continuation. I like this kind of expansion, deep correction, pop back up a lower high, but you can see that sort of triangle forming. And if anything, I'll be a bit more bullish on that, looking for, because there could be a drift lower still in the US dollar, which should help this on the upside. And if this flushes down, yeah, it's game over. If it goes through that 135.85 area, this low through here, then I wouldn't worry too. It could be a bit of back and fill, and it's kind of weighing on the market, and it's just trying to flush out some longs. But if that sticks, this level holds, and we start to hold this level around 35.93, 94.95, look for a higher low and work up to, I'd say 36.56. That's what I'll be looking for anyway. So I'm just telling you about the way I would be attacking these markets. If I happen to be trading that pound, the US, and so on. US yen. So US weakness. Okay, there's still US dollar weakness, but the problem is yen, safe haven buying, is dragging it back up again. Okay, you probably find that's a bit of easing in the US dollar as well. Yeah, I'd say so. So I'm just looking at that and trying to figure it out. So you've got US dollar has been heading south. It was still getting capped a bit. Let me just look over at another chart here. US dollar. Yeah, 4-hourly chart. Just get to a 30-minute chart. Sorry there. Yeah, it got knocked down about midnight. So US dollar got knocked down a bit, quite a bit. That should have weighed, more on the yen, but obviously they're selling into the yen, not really buying into the yen. So that I do expect that's kind of rallying up. I don't think it'll get too much ahead of steam. It might be preemptive of the payrolls tonight, but I would be surprised if 150.60 holds. Sorry, breaks, and it pops back up and keeps rallying back up to these highs. I would expect that to start rolling over more than anything else, especially with the weakness, or maybe that's just anticipation of the US dollar bouncing, which it isn't at the moment. Strange little one on the end there. Strange move, but anyway, you trade what you see, not what you guess. Gold, look at that, smashed out in gold, straight down through 17.93, straight back up again. So that was the start of the US session. So that's, I don't like to use the word manipulator, but when you got algos running stops both sides of the markets, it is a form of manipulation, in my opinion. Something we don't have access to. We can't just go and start, chipping away at bids or offers, the buyers or the sellers. But the algos can really drive it, flush down there. Got that level there, 17.99, stops under there, enough to drive it into some stops below 17.93, and then bounce straight back again. So there was no data release. That's at 1:30. That's the open of the US session. Bounce straight back up again. So I would be surprised. Like I said, this is, to me, looking more heavy. I would think this is going to hold 18.07. Now, if the US dollar bounces, it's going to weigh on gold. Excuse me. It's going to weigh on gold price, which could see it heading down through 17.99 again and back to maybe to 17.93. But don't expect too much in gold. It does a lot of action, when the US market kicks off. So it could just drift. It could just sort of grind its way lower, drift sideways. But for now, there is a chance that it could ramp straight up through 18.07. But previously, it hasn't been a buy in inflationary hedge at all. Okay, people like to believe that. They've been buying it because of that. But every time they buy it, it gets knocked back on the head. Okay, and there is more than enough talk of inflation. We're talking of rate rises, so maybe the market's waiting for a rate rise. Maybe gold's waiting for the US to raise rates. But if they're going to raise rates, it's making a stronger US dollar. Supposedly, we should be a bit of weakness into gold, and I think it's just it's just struggling to go on the basis of rate rises. Crude oil, oil straight back up into this zone, above, just ticked above 90, bounced off this level we've been speaking about. So we spoke about the last few days, this holding, as the momentum eases, momentum goes down, price is going sideways, it's bullish in my opinion, because once momentum starts to pick up, we're picking up from a high base as opposed to a move down and coming back into the highs, we're actually taking out the highs. Okay, so once you see that kind of action, market moving sideways when momentum's coming off, however you measure momentum, look for continuation into the next level, which is that 90 to 95 area, 92, 93. So I think there's got a bit more to go on the upside here. Copper, we'll quickly go over copper. Popped up. This was the level. Is that from 30-minute chart? So that's previously, that's previous session's highs, and then we've got the market's backed off, but it's actually looking quite good. I don't mind that so much. The way that's edged lower, it doesn't lead me to believe that it's going to be a lot of weakness to come. Yeah, it could do, and if we start getting over to looking at something like that, there is a level through there. It's reacting down and off. So I mean, if that starts to get through another lower high off that level, it could easily crank through 97. This zone through here. But for now, it's actually not looking too bad. I don't mind. It's not a reactionary. So you get a spike up and then straight back down again. It's been spiked up, down, spiked back up. It keeps getting supported. So that's more bullish to me. So I'd be looking for something maybe, like this, start to hold and then going up. Okay, but we'll keep an eye on that. Lastly, we'll just get over to a couple of Bitcoin and Ethereum. But Bitcoin, I'm expecting that to roll. I'm still thinking it's going to roll through that support zone. We'll just widen that about. There you go. I'm still expecting to get through there, but you see the Amazon news, that bounced just with everything else. It pretty much had a very, very narrow range for Bitcoin anyway yesterday. So it didn't do too much. It means that bulls are not expecting, they're not diving in, but sellers are not diving in either. It's just sort of going sideways. So maybe just waiting to see what happens tonight with payrolls. Ethereum was holding below that 2638. That's the spike due to Amazon, which is a bit strange to see that into your cryptos, but it looks like you've got a minor level here at 2583, could hold it up. So if it's going to hold it up, you'll want to see this pull back, get supported, support a pullback, and then rally. Okay, so that's it for me. I think we'll finish it there. Thanks very much for joining me. Remember, if you do like what you hear, it'd be great if you can leave us a like and follow us on YouTube. We've got all our social media and check out the website, www.tradethestructure.com. All right, guys, we'll speak to you soon and have a great weekend.